Hey everybody, welcome back to Market Movers. It's nice to be with you. Mike Fairborn sitting in for Ben Watson today. And today I'd like to talk. Wait, you know what we're going to do? We're going to look at the markets, generally speaking. Of course, we always like to look at markets. We like to look at sectors, ultimately companies as well. We want to get just a general idea of what moved this week and also what might be poised to move into next week as well. So I'll look forward to going through that with you all today. Would like to welcome John the Noble Savage on board with us, as well as Riceberg. Good to see you, Riceberg. And Scott, aloha to you. We've got Greg, Sharon, Mighty Mouse. Folks, it's good to have you here for this shortened webcast. Normally it runs about 25, 30 minutes or so. But with that, would like to welcome also a good friend, colleague of mine, Mr. Cameron May. Any questions you have, I'll keep an eye on that chat as well. And I wanted to state also that you can follow us on X, Cameron May CS, Mike Fairborn CS. Would love to have you join us if you are interested to do so. Hello to you, Sharon, as well as Beth. Good afternoon. All right, well, with that, we don't have a ton of time, but we have some great stuff to cover. So let's dive into some disclosures to get the show on the road. Information here is for general information purposes only. Let's see. Paper money software application is for educational purposes only as well. Now, past performance is no guarantee of future results. And investing involves risk, including the loss of principal. There is no guarantee that the execution of a stop order will be at or near the stop price. If, in fact, we do look at some of potential paper trade that we often do sometimes in this class. I know Ben might put those in from time to time as well. So with that, let's dive on, though, into our markets here. Get rolling. All right. So we've got here a continuation above an ascending triangle, as you can all see, folks, right there. We had one earlier in the trend. We've got one later in the trend. Today is just another day to the upside. Was it an all-time high day today? Clearly, zooming in on that guy, it was another all-time high day, blasting through really market, sort of seasonality, a seasonal trend that we oftentimes get in September. Let's just kind of compare that real quick while we've got it on the screen. Seasonally speaking, there you go. What do we generally get? We'll just keep it as it stands right here. A weaker September on average. We didn't get that. This is a great example showing that, yeah, seasonality doesn't always work in our favor. 5-year, 10-year, 20-year, you're going to see something very, very similar to what you're seeing right here on this chart with this September. And what we talked about actually last week, I know we did one in this class. I think I did it last week as well. Markets and sectors as well. Whatever class I teach, we talked about this concept. And let me get back to just a regular standard chart. And that is this. When you're trading or investing, a lot of times what you're doing is you try to trade what you see, not what you think. And in a lot of cases, what were we seeing here? We were seeing a strong price trend. We were seeing stocks test the market itself, a number of stocks actually testing prior highs, like we saw right there. Let's get a 6-month to kind of review that. And the chart really does tell us what's going on in the market. Now we can wait for further indications like a lower low, a lower high, basically a change in trend, a break below maybe one of these trend lines here. That puts us more in sync possibly with a seasonal type pullback in the S&P 500. We didn't get that at all. In fact, we've seen nothing but strength. Folks, when you're getting all-time highs, you're just getting a lot of strength out there. We trade what we see. We try to remember that point, not what we think is going to happen. And that's very important too, because if you trade what you see, that might be price patterns. It might also could include technical indicators. We didn't have a lot of technical indicators that were showing weakness up here at all. A lot of even some of the money flow indicators were showing strength as well. So keep that in mind as we take a look at this. Now, just want to take a look, broadly speaking, at our markets here. And it's just kind of an interesting way to do it, too. I thought I'd throw this out here just as a little separate kind of a wrinkle here. But if you pull up just schwab.com and then just go straight to research here, it gives you a nice little chart of what's happening during the day, from the day's open until where we are right now. And as you can see over here, it gives you a quick view of underperformers. Now, there are a number of traders out there, even on the scale of like a financial, some of these institutional traders. And this is what they'll do. And this is why this is so interesting on the day, the 5-day, which I'm going to look at next, is we want to kind of encapsulate this week. But you get them all together here, and it's pretty clear. You can see it, the charts here. Now, a lot of these traders, just so you know, they'll say this. They'll say, in the first 30 minutes of trading, and I'm right over here, what's leading on the day often tends, not every time, there's nothing that's everything in the market in every case, but there's your first 30 minutes over here, okay? What tends to begin in the first 30 minutes, what happens will oftentimes be the case towards the end of the day. In other words, what's leading in the first 30 minutes of the day? Okay, you can see the little color-coded note down here for NASDAQ. How do we do that first 30 minutes? What was our high? What remained the high? What remained the outperformer on the day? Well, it was the NASDAQ. What was our loser on the day? Well, it had a good day yesterday, I believe, but the Russell. Okay, and you can see it right down here. How was it doing? Well, I'll tell you what it was doing. It was actually making a lower low and a lower high. Once that trend has been established, oftentimes what you'll see is that follow through. And I'm just giving you some ideas. I've read this before in terms of what some of these institutions will do. They're looking to move funds. Not all of them will do it, but it is kind of a cool review that you get right there. Now, of course, you have different regions here. We've got U.S., Europe, and Asia. We're talking about U.S. markets here. Let's take a look at the week right now and just see what was happening on the week. Wow. So the leader on the week was the Russell. That's performance there. So what I would say, when we take a look at the Russell here and we start thinking about market movers potentially for next week, what really scored well? What did we have this week? We had the FOMC meeting. We had the subsequent rate cut of 25 basis points. More on that in just a second. Just want to hit some of the high levels there. But notice that we had really a strong trend here on the Russell. Now, if we look at this, could there be some small caps that are poised to run into next week? I don't know if you're into small caps or what you might look at specifically, but I wanted to throw that out there because it is a performer. You can see it, big picture here, and it might be something that you just want to be mindful of. Now, what were the performances on the week? We've got all our numbers, and they all performed well, right? In terms of percentages, though, clearly the Russell did lead the way higher and then followed by the NASDAQ. Generally speaking, in those interest rate cuts historically, nothing's 100%, like we always say. But when you cut interest rates, communication services, discretionary, technology, that's kind of heavy. At least technology, communication services are heavy in NASDAQ. They have tended to outperform under a rate cut environment. Some of these technology companies will reinvest, or I should say what they'll do is they'll reinvest in their business by borrowing at cheaper rates. And just generally speaking, that could be the case there. Now, it does impact, these smaller companies too, even more so, because they have just less funds to work with than if they've got to borrow. Of course, with less funds to work with, they don't want to pay higher interest expense either. That would be bad for them. So anything that's lower there benefits the small cap. It's just an interesting take, tying in some of what happened today on this week on a macro scale to what we're actually seeing on that 5-day time horizon. It's not that surprising compared to what often can happen too, as that occurs. So park that in the back of your minds for potential market movers next week. And what does that include? Well, that does include some of the tech stocks. All right, let's take a look at going back here and look at the NASDAQ. Welcome to you, Will, Janelle. Great to have you on board for our last class of the week. I'm just sitting in for Ben, who is out, I think, on the road. Ben's always out on the road these days, doing these live events, which are really great. Hello to you, Dave, as well. All righty, good. Well, here we go. Well, here's the markets. What are we seeing here? Good follow through here on the NASDAQ 100. Now let's do this. Let's take advantage of some of the tools that we have right here built into the platform. You've got up top here the main tab. There's our scan tab, sub-tab Stock Hacker. You've got to be in the Stock Hacker. Okay, I'm going to take this off. We're going to use it just in a real basic format. I'll even say the S&P 500, maybe a bigger, no, forget it. Let's do that. We were just talking about the NASDAQ 100. Real easy to do. We could do one or the other. But what were the performers over a 5-day time frame now that we're talking about technology maybe being one of the bigger movers out there? Well, here you go. Let's see. So, well, yeah, Intel had a really big week. Joint discussion, agreement, I guess, or collaboration, one of those terms, with NVIDIA, right? Some big moves, but getting a sense of what's kind of moving out there. Boy, software had a good week. Software. I've always kind of considered, well, there's a lot of software in here too, but there's Adobe even. Adobe's been down for quite some time, but look what the key movers were as we really kind of narrow it down in industry. So over here, semiconductors, interactive media, of course, those are the same. I mean, it's basically, you've got Google Alphabet right there. That does fall in communication services sector as well. So I want to look at those. Before I do that, though, I did want to also hit up top here just some of the highlights just from the FOMC meeting. And I've got that. Let me just scroll down here. So just some key points that came up. FOMC, they did cut by 25 basis points. The median projection there was 50 basis points more rate cuts in 2025. That's this year. So potentially 2 more rate cuts. However they do it. But yeah, that's the median or the middle projection for, I guess, the whole basket of the Fed governors over there, is what they're looking at. They do say uncertainty about economic outlook remains elevated. Most of it is tied into the labor market. And so there's going to be a continuation, as what a number of analysts have said, a continued anticipation of weakness in the labor market, and we might see more of those rate cuts until some analysts are projecting 100,000 new jobs are added. That was just a number they'd thrown out there, but I thought it was it's a big round number. Just park that in the back of your mind. When you start to see the labor market increase jobs by 100,000, maybe things shift, and maybe, the economy shifts as well. But my gosh, how do you argue with the markets, right? Just the strength of the market across the board. By the way, this was the recovery here that we saw in the rut and the Russell itself, 2000 index, and it was actually really quite strong. Now, let's step back a bit too, as we've gone through some of these. And I just want to take a look and just see the sector rotation grid. Oftentimes, where might we see rotation coming into with a rate cut? What's really shown some strength over there? And it's pretty clear. Now, again, we're setting this up relative to the S&P 500 by using the relative strength. I'm going to adjust that again. Financials slipping out of the way. But what kind of moved a little bit this week? We're going to break that down. We'll get the actual numbers here. But I want to show you as I right click just to show you the quick comparison. No, it's over here. Maximize the cell. And as I go over here, yeah, you can see how these have been doing over a rate cut environment, and then also an anticipation of additional rate cuts. So that's part of the environment too. Further rate cuts, discretionaries relative to the market. There's your relative strength right there. It's a great indicator to get some comparison, see where really price movements occurring relative to the market. Where is the strength going, and perhaps where might investors and big institutions be headed into? Now, this is the relative strength index. There's just a look right there. I just pulled up the script of it, but all we're really doing is we're just comparing the S&P 500. We could change this correlation if we wanted to, right there, into like the NASDAQ or anything else. If you want to change the NASDAQ, there's a better way to do it than opening up the code, but it's just giving you a relative performance compared to the S&P 500 in this case. In fact, over here is the best way. Click here and then go down to the relative performance. A great tool. Correlation with what security, just throw it in right there, and you have it at your fingertips, okay? Click and click. I'm going to pull back out, and let's just see what is continuing to move, because we could see continued strength here. Now, there's that Infotech. Kind of dipped a little bit, but guess what? It's coming back. Financials bounced a little bit back today, this week. and communication services. So really, I would have to say, you got still the main three that recovered. What did everything else do? Relative to the SPX down here, we filled this in the bottom corner, but what are some areas still to look at that could be of interest? Well, yeah, discretionary, infotech, and communication services. This is a good thing to look at during the week as well. By the way, one thing that can be done too, and let me just share this with everybody. It's just a simple grid. It's not a think script. So I'm just going to share this grid in the chat if you want it. Here you go. It's right there, but let's go back into just some numbers here as we look at some quotes, and you can see the 5-day change. So you saw some of the graphs there relative to the market, but here you go. Not too surprising. What else was there? Okay, yeah, this is we kind of thought 1, 2, and 3 over a 5-day time frame. Okay. Now we've got industrials, financials. These two are interesting, and this was everything that actually closed up on the week thus far. What do we have? Yeah, about 45 minutes left in the day, and here are the laggards, staples. Right. So pulled away from defensive and went into more of the growth and discretionary into the markets. Okay. So you saw that right there happening. Now, one thing I want to highlight too, as we talk about market movers, just as a quick note in terms of rotation into these other areas, if we want to now, we can go ahead. I'm going to customize. I'm going to show you over here what we've got. And you'll notice over here, we can do like a 1 month % change. And let's click on it right there. And there you go. We'll load these up. Now, this can be an interesting thing to look at as we are getting closer towards the end of the month. But what's been performing on the month, and what some traders will do is they might allocate funds into what they might believe is going to be the market movers into the next week, into the next month. We could use a 3-month, 6-month, or 1 year. Those are very common. This is really kind of a shorter time frame here. But when you look at these, they might say, well, I'm going to allocate into the strongest performer on the month. And they're going to do that the last market trading day of the month. And they'll say, that's what I want to look to trade for maybe the next 1 to 3 to 6 months out, perhaps. This can be an early indication of that change. Just looking at the 1 month change. You say, Mike, but it could easily go back down the next week. It could, but what it could be picking up on is a change in trend. It could be picking up on a change in trend. If we go over here and let's see if I can just copy that, and I can. Better than trying to remember that symbol. That's for sure. Just right click and copy. But notice over here, not only do we have trend, look at this trend. This is a trend against the market itself. Now, if somebody would have been taking the same approach and saying, what was the best performer on the month? What might be the market movers for the next month? Come down here, maximize that sell grid. If they had done that down here, when it did change, it flipped back in April, and we just say, the month of April right there. Oh, what's going on behind the scenes here? Well, it's a change in trend. It's a higher high, higher low. It was the highest probably on the month in terms of performance. It's a pretty big recovery off the bottom. But again, that's what you're picking up on when you come back and you look at like this here. When you say, what was the best performer on the month? Folks, you could be picking up on the trend. Just like we looked at the trend on the day on the Schwab.com, we looked at the 5 trend on the week on Schwab.com. We're looking at the month here. We look at the 5-day here as well. But it's all about trends. What's your time frame? You could be tapping into a longer term trend. And that's the whole idea. Remember, now this is just performance against the S&P 500. So this is actually like really impressive performance. So you can only imagine what we're going to see when we go ahead and we just take a look at it. We looked at it a little bit earlier, but the NASDAQ since April, really strong, right? And we know that was a recovery off of the tariff dip, but it remains strong. So even if we'd seen this month outperform, we got it this month, this month, this month, this month. The trend is still up, in other words. So Could that be an effective way, a helpful way to know what's moving on the markets? It could. And again, you can come over here. By the way, I think many of you already have this. I do love the colored ones. The colored ones are the best because it just, you can see things very clearly. This is good too. I mean, these are colored, but I like the whole block covered. If you guys want this, let me share it with you. This is a ThinkScript. ThinkScripts aren't guaranteed for timeliness or accuracy, but as long as the data that's flowing into the platform is good, and I believe we have good data, then that data should, the ThinkScript should work just fine. But this is an actual ThinkScript. I'll pull it up right here. I did adapt it a little bit, but so I've got, yeah, I put notification on there, but here you go. So this is the one, and by the way, if you ever want to change it, it's as simple as this. Go into that ThinkScript. Instead of using 21 days, shoot. You want 2 months? About 42 days, or 42 to 44 days. 3 months, 65 days. A full year is 252 days. Market trading days is what you're looking at there. Okay, here is that right there, that script. But I think this is really, really relevant to this class. Thinking about market movers, here we go. So let's just say 1 month percent change. And this is the colored version. And here you go. Right there. All right. Did I get the right one? Yes, I did. Okay, good. So just change it. And you can have a number of these set up, whatever you want. Right now, I'm just carrying a 1 month in there. And that's it. Okay, so good enough. Here we go. Let's back to our charts here. And a couple of additional items I want to take a look at as we look going ahead into market movers and saying really what kind of moved on the week, on the month. We can do this sector related, but what about stocks as well? What do we see over here on the stocks individually? Well, I'm going to jump down over here, and what we're going to do, you know what? We looked at the NASDAQ. Let's look at the 500. Loads up pretty quick there for us. I'm going to throw our sub-industry all the way over here so we can see it, and there you go. So Intel, a really, really good performer, and you've got others in here as well. Okay. Now, a lot of times you will see like reversal patterns in the market too, and those can be actually quite helpful. Patterns, indicators, things along these lines. You can actually get too over here. A lot of times I know many of you will look at, in fact, there are patterns. I was just going to say patterns over here. The patterns are actually broken down into a couple of different regions too. Price patterns are interesting because a lot of times when that trend is coming up, you may be getting some of those flag patterns. I don't know if you guys have utilized this before, or the candlestick patterns. Now, this is going to show it to you on the chart itself. What you can do as well is you can go in and you can screen for some of these too. That's really, really helpful to do, as you go through it. We've got also some of these over here. I'll just pull this up real quick. Wanted to highlight this. There was actually, I don't even know if it's going on still. Yeah, maybe so. So we've got this was a candlestick study that I did, a brand new candlestick study that we created. It didn't get posted till this morning. But if you're interested in that, it's one that we don't have available normally on Thinkorswim, but it's a longer term reversal pattern. That's out there. If you guys find this interesting or helpful, maybe something you could check out. I do have a scan in there. So what it enables you to do is scan for it on the Thinkorswim platform. If you want to take a look at it, it's right here. That's the candlestick chart discussion. But and then, by the way, I keep all of those codes to, if you're interested in those. It is another ThinkScript code, but it's at the bottom under description there. You can click on more. Always would love to have you follow us on our discussions too, if that's of interest. If you're liking today's presentation, be sure to smash that like button. Always appreciate that. It does help with the YouTube algorithm in these classes, and definitely give us a follow as well. Okay, so we broke that down. I want to look at another category before we're all set for today. And I want to take a look at market posture specifically, and show you how we're doing in terms of market really breaking up. Longer term, 3-year weekly chart here. As you can see on the S&P 500, the 10 EMA, exponential moving average, pulling above the 40. Notice it keeps expanding. That's where you tend to get a lot of strength. Where are some of the indications you can look for? If you see that 10 weekly EMA just start to curve a little bit or flatten out, sometimes you get a little bit of a reversion back to the mean of the trade itself. But right now, as it's expanding, I mean, it is just showing strength. What would be fascinating, though, is if the market posture remains the same and we actually hold up into a seasonal time frame on the S&P 500. Because seasonally speaking, if we're able to even drag through here a little bit, one of the strongest months of the year historically on a seasonal basis is November. And look at October. I mean, if you kick in here, and I'm just saying if you go sideways to up over here, we could continue to rally. That would be a massive, massive run if that were to take place. We don't know if that will, but it certainly could take shape and go and follow a seasonal approach. Right now, it's not following seasonality at all. So it's just going totally against it. It is, absolutely. Yeah, it's busting it. It's breaking that seasonal pattern. Just such a strong move over here. It does make me wonder, what are we going to get? Is it we're going to see more strength as more deals are made with tariffs around the U.S. and other situations there? So we'll see. But really, folks, we talked about it. Technology was quite strong. We looked at that. You can scan for those individual names in here and check those out. Technology, we broke down specifically semiconductors, application software. Now, we could easily do this too. We did the NASDAQ 100, but if I wanted to intersect that specifically with technology and just see what's in there, these same names are going to be in there, but this is what you got. Now just scan through it. There, you got 40 information tech companies within that NASDAQ 100 right there. And what you can do is you can click over here, save that as a watch list, and just roll through these and just see how they're looking for the week ahead. Again, that was right there, save as watch list, and you're good to go. All right, everybody. Well, hey, that went super fast. I just looked down, and we've done it. We're out of time. Great to have you here. Have a fantastic weekend, everybody. And yeah, take a look at some of what the performers have been within these different groups that we've looked at, maybe where some of the rotation has been. See how those charts are setting up. Are you seeing flag patterns? Are you seeing candlestick patterns out there that might correlate with the flag pattern? Use all those technical tools that you've got. Thank you, Cam, for your help in the chat. Everybody, take care. See you next time.